Briefing stock market earning news. Market sentiment is currently cautious as various sectors face challenges from rising oil prices and disappointing tech earnings. The stalling of earnings growth poses a significant risk to market recovery and further stock declines. Top story: analysts foresee strategic opportunities arising from the Federal Reserve's decisions affecting market dynamics. More on this just in a bit. Investors should remain vigilant and adaptive, focusing on fundamental analysis to better navigate the shifting market landscape. Top headlines: why experts say earnings growth may be stalling and what that means for stocks. If earnings growth stalls, it could hinder market recovery and investor confidence, leading to further stock declines. Understanding the timeline and factors behind this potential slowdown is critical for investors navigating this turbulent environment. Intel's 15% earnings pop evaporates, erasing billions in market cap overnight. Do you just see what happened here? And they're blaming Jim Cramer for this because he said something good about Intel, and you know what happens, inverse Cramer. Such rapid shifts indicate a volatile market environment, particularly in the tech sector, where investor confidence can quickly wane. Understanding the causes behind these fluctuations will be crucial for stakeholders looking to navigate this dynamic landscape. Stocks get relief as oil halts surge, Intel rises. Clearly tells you energy has a massive role to play in this market. Although the relief from rising oil prices is momentary, it can influence market dynamics positively, fostering renewed investor interest. Wow, what a contradicting view. Wall Street falls as tech earnings spark AI spending worries and oil hits $100. We discussed this in our previous grid report. And last but not the least, Tesla, Alphabet lose hundreds of billions in value in post-earnings stock plunge. Two of the largest companies in the world just lost billions. The drastic drop in market cap for tech giants reflects broader concerns about growth potential in the sector. This situation indicates growing investor uncertainty about the tech industry's future amidst rising costs and market volatility. And here, US stocks face tests from Fed decision, upcoming earnings from prominent tech companies. Investors are seeing a potential opportunity for strategic adjustments based on Fed signals. The interplay between Fed messages and equity performance could shape the market movement significantly. And just to back all this up, Cassandra Unchained. Palo Alto, California, hidden debt at US tech giant swelled eightfold in roughly 4 years to an estimated 1.65 trillion as artificial intelligence investments ballooned. We discussed this in the previous report. And here it is. Just a 36% probability of a hike next week, meeting July 29th. This meeting is definitely in play. Don't expect any leaks to reporters because Warsh doesn't believe in forward guidance. Instead, Warsh is looking at the 36% and concluding that the market might want a hike. If this war continues to escalate at its current pace, I wouldn't be shocked if we saw a rate hike at July FOMC. 6 days left for the FOMC meeting. Currently, there's 26% chance of a rate hike, and also 72% chance of a no change in rates. The next FOMC meeting is next week, July 29th to 30th. The Clarity Act is expected to pass either the same week or the week after, on or before August 7th. With CPI and PPI cooling, I expect interest rates to go down next week. Wait, another contradicting view. Oh my goodness. You gotta be very careful what kind of information you pick from the internet. And matter of fact, this is one of the first time I'm doing this kind of video, where not only I'm giving you stuff from the grid, but some of the other perspectives, whether it's from Michael J. Burry or just some random anon on X. It's a wild, wild west. So take it with a grain of salt. And I'll give you my 2 cents where I see fit. The chances of a Fed rate hike at next week's July FOMC have now soared to 31%. By the way, this is July 22nd. That's why you have to be very careful. If you go with the latest, holy moly, what is this? Yeah, that didn't work out. FOMC? This is latest? Anyways, ladies and gents, this is one of the shortest grid report. This is all I have for you in this episode. If you like what you see, subscribe, and I'll see you in the next one.